Okay, just gonna go straight into it. Uh, I marked my areas of liquidity. I marked my Friday's high, and I also marked Thursday's high. And with that said, I marked my London lows and Asia lows, so on and so forth. But as far as the price action went, I originally was bearish. We had bearish order flow. Where was it? We had bearish order flow right here. Uh, Upon bearish order flow, we actually, as soon as we entered into the trade stopped us out almost immediately. So there was no news, there was nothing that came out. Trade just stopped itself immediately. It was just an unfortunate event, and like I said, we can't control unfortunate events, or I can't control unfortunate events. They just happen, and it is what it is. It's just part of the probabilities of trading. So I ended up looking for a long, and the reason I decided to look for a long was because when this candle stopped me out, I believe I mentioned that it stopped me out in less than a second. It immediately stopped me out. So that indicated to me that there was bullish order flow, and also when there was not even a bottom wick at this candle. So that indicated to me there was a lot of bullish order flow coming into the market. So I ended up entering into a long. After entering into this long, my stops or my high target was toward 188, I believe. Yeah, and price just hit it. So I placed my targets up there, and as soon as price started showing bearish price action, I ended up actually exiting from the trade. And the reason being is because actually, let me see. Yeah, price never hit TP. Anyways, um, the reason why I exited the trade was because there was bearish order flow coming in, and considering I already had a loss before, and I go for much larger trades, I can only go for however much I can lose, right? And at the end of the day, like I've mentioned many times in previous videos, I want to focus on capital preservation. Capital preservation is my goal. The best way for me to keep my consistency and my discipline is going through with capital preservation. So, with that being said, I ended up exiting out of the trade. I ended the day in profit, of course, which was okay. Obviously, the trade ended up going a lot further. I wouldn't say a lot further, but ended up going and hitting full TP, which, like I said, unfortunate, but I have to keep in mind that I did take a loss already, and the entire strategy I have can only afford to take one loss out of the day. So, me going into this trade, these longs originally was already risky. So, I already needed to kind of restrict myself. I had to set myself a mental break even point, and I had to make sure that whatever happens during this trade, that it shouldn't go and hit max stop loss, because at the end of the day, hitting max stop loss um, can be detrimental for me from this second trade. As far as my emotions were going, I didn't feel emotional taking the second trade, nor did I feel emotional in the first trade. I didn't have enough time to react to the first trade, actually. I did not have enough time to react to the first trade whatsoever. So when the first trade happened, it was just like, okay, well, that happened. And coming into the second trade, I was looking at price action and I saw, okay, there is a lot of bullish order flow coming in. More than likely, we're going to go ahead and hit this high up here. And lo and behold, we do end up hitting the high. It was just that we had a retracement down and then a move up. And like I mentioned, in order to keep my psychology intact, I didn't want to stay in the trade. I could have just scaled to break even and let the trade play out, right? Could have definitely done that, but at the end of the day, I would rather just, like I said, focus on capital preservation more than anything. So I'm not really the type of person anymore. I'm not the type of person anymore who looks at this and gets a fear of missing out. I don't feel like I've put money on the table, right? I don't feel any of that. Um, or not put money, but left money on the table. I don't feel that way because at the end of the day, the money wasn't mine in the first place. That's how I look at it. All of what I do as far as trading, especially in an evaluation phase, this is an evaluation phase. This is all fake. I just have to pass this and then I potentially start making real money. So, as far as this whole entire phase goes and even afterwards, it's still going to appear fake to me. The way I look at it is I would rather focus on consistency. And the way I look at trading is none of the money is going to be mine until it enters into my bank account. Until I see that money go into my bank account and that it stays in my bank account, that's when I could say, okay, that money is mine. When I look at trading and seeing my account balance, I don't feel any type of emotions anymore, mainly because I don't want to be attached to my profits. I don't want to be attached to any of it because at the end of the day, it's not even mine. I can't go and do something with that with those profits unless they are transferred into my bank account at the end of the day. So, that's the type of psychological mindset I have for myself and I plan to keep it that way. So, if there's a trade that, goes ahead without me, or if I exit too early and so on and so forth, I'm not going to put myself in a position where I feel like I left money on the table, trade went without me, yada, 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 so on and so forth. I'm not going to feel that way because at the end of the day, the money wasn't mine to begin with, and anything that happens, happens. And I mean, I can only control so much when it comes to the market. I can control my decisions and I can control following my strategy. That's all that I can control. As far as how the market moves, I can't control that. I just focus on patterns and things that have happened in the past. I focus on data and I execute on that data. So, yeah. With that being said, that's pretty much the trades I've taken, and we'll see what tomorrow brings.